Okay, welcome everybody back to the channel. I'm Hayden Otto, of course, your host. And today I've got with me Earnest Hamilton. You can go follow him on X. Financial Ernie is his handle. And today we're going to get into a bit of Ernest's background. And also, I'm quite interested in the fact that he's a big fan of CleanSpark. And so we're going to delve into CleanSpark, find out why he's such a big proponent of it. And also, we're going to dive into their latest earnings and a few other things that came out recently related to that. So, thanks, Ernest, for joining us today. And can you give us a bit of a rundown on your background,
Yeah,
first of
sure.
all?
I went to school for mechanical engineering. That's what I got my degree in, and actually started working in power generation back as an intern while I was still in college. So after I finished university, I got hired full time. So power generation, the portion that I work for and indirectly is the actual manufacturing and repairs of power plant parts. So all of the rotating hardware as well as some of the stationary hardware that's used in the hot gas portion of those power plants. My facility here in Florida, we actually repair them and then we also manufacture them. So we are one of the sites, part of Mitsubishi Power. So it's a global MHI. Mitsubishi Heavy Industries is the main company. So we're just one of the plants related to them. So I've always had power generation for the last what is it now, 17 years. That's how long I've had a background in this industry, and from that, I programmed robots early on in the career and kind of moved on through that, managed various parts for the engine, worked with different design groups, and then I've been, managing a team of engineers for the past couple of years. But what kind of got me into the whole Bitcoin mining industry, actually, I decided I wanted to go ahead and dabble in some investments on my own, and I was screening various company stocks, and you can put on whatever types of filters and different variables that you want when it comes to screening. And I happened to find CleanSpark. It was one of those stock tickers, along with I think it was Riot, Mara, and a couple other ones. They all kind of came across one of the specific screens. So I went ahead and took a small position in CleanSpark then. And at the time, I was more just looking for, hey, this could be a high beta type situation. I might be able to make 5-10% and kind of swing in and swing out. Well, part of what I do when I do my due diligence is I start to research the companies a little bit just to make sure that I'm not going to jump into a company. It's just going to go straight down. You can look at historicals, but I think it's really important to actually look through the company's financials to kind of see, what does their guidance look like? Is there actually a need for that specific company moving forward? Because you can also find these companies that maybe they had one or two really good earnings and the price kind of surged, but really it's more of a popular type of situation and it's only good for a season or two, and then reality hits and it kind of loses that traction, if you will. So with CleanSpark, I started to do my due diligence, researching the company, and I found that they were pushing on a lot of hash rate. So I actually started investing in the company about a year and a half ago. So I haven't been in the Bitcoin mining industry as long as some of the other members that are on X, and I'm sure even yourself, Hayden. But it was something that really interested me. And when I learned how it plays its part in the whole monetization of power, of course, being in power generation, I found it very interesting. So I
Yeah.
got on
Look, I
X.
didn't know anything about your background outside of the stocks, the Bitcoin mining stocks. So that's pretty interesting, and I can see how those two areas overlap, and why you're so interested in all this now. So yeah, that adds a lot of context.
Yeah. I try, sometimes when I'm, chatting on a space call or, just kind of, whether I'm, communicating with, an executive to see if I can get them on, my YouTube channel or on, the actual podcast, I'll kind of talk a little bit about that. And I think it's important to kind of understand the interest because, I do feel that it is a little bit of a niche, network, the Bitcoin mining, right? So, but it seems like from what I gather, a lot of these different companies, they all know each other. They're all participating in the same type of conferences, so they definitely have a chance to get to know each other and each of their companies a little bit. So I think it's an interesting concept. I got a chance to go actually to the Bitcoin mining conference this last May. So, what was that, about 8 months, 9 months ago, or something right around there. And actually, it was actually during the summer. It was around May time period. So, probably like 6 months ago. And it was a really good time, and it kind of opened my eyes to Bitcoin mining. Just how many people were actually interested into it. It's one thing to kind of join a group, on social media and kind of start to exchange with people, but when you actually, go somewhere and you see just how much interest there truly is for it, it says something. And I saw how many vendors were, actually putting out transactions at this specific conference. I really saw the opportunity, even for Bitcoin mining and Bitcoin itself, how much it was starting to become more than just kind of like a niche, currency that some people thought was, more valuable. I started to see some actual use cases for it. And from there, it just struck my interest even more. I got an opportunity to interview both Matthew Schultz and Gary Vecchiarelli while I was at the conference. It's my first, in-person one-on-one interview, so a little nervous, but I think it turned out pretty well. And from there, kind of got to know them a little bit more and got an opportunity. I went ahead throughout there and asked about an opportunity to kind of visit one of their sites. So I got to go to Sandersville, their largest Bitcoin mining site in Georgia. It was about hour and a half away from one of our other manufacturing plants up near Savannah, Georgia. So I decided just to take a small field trip. On my way up there, I had some business, so I got up there bright and early. Went ahead and got a chance to actually walk through some of their air-cooled mining, facilities there, as well as their immersion mining. So it was, again, it's one thing to kind of see it online, see different
Yeah.
people kind of with various videos and things of that nature. And you can research, you can look it up, but to be at an actual data center and to kind of actually see, the equipment, just the magnitude of the amount of miners that it takes to run one of those operations is pretty incredible, and just the amount of power draw. So, just to kind of put in perspective, some of our power plants that we put together, they'll do a combined cycle. They may be around 200, 300 megawatts. Some of them can get up to over 500 megawatts. Looking at some of the combined cycle. When I say combined, I'm talking about the hot gas portion, and then afterwards, it'll actually go through a steam turbine as well. And that's another way that it can kind of recoup some of that excess power that would otherwise be lost. And then it'll end up, converting that over through the steam process. And that's a kind of a way just to kind of capture a little bit more of the overall power. So one of their facilities would actually draw enough power for one of these power plants. I think that's pretty incredible. Because I've been to these power plants, just how big they are and the cost, to run one of these. So to see, again, the opportunity for some of these power plants, and knowing how the power plants profiles are, you can run what's called a base load. So you're never going to actually, shut it down. They'll run sometimes 1.5 to 3 years at a time, constantly generating power. But the thing is, that power is not always in high demand, especially when you look at solar, and you look at some of the other renewable energies like wind. We're starting to see some of the power plants, we're moving towards more of a high starts, to where it's basically just used to take care of what's called a duck curve. So that's any time. So, if you're down south, you're running your air conditioning a lot during the day. You've got a lot of solar power as well. But at night, a lot of that gets kicked off, and you don't have, as much power being drawn. So in those types of situations, there's just excess power. So knowing that Bitcoin itself can be utilized 24/7, and it's a way for these utilities to be able to distribute the power without it just going to waste, because there's no massive amount of battery plants at these locations that they're just going to be holding a charge. So that has the benefit there. And you could say, well, why don't they just shut it down? It's a significant effort to shut one of these down. And anytime that you're starting and stopping one of these large units like that, you're thermally cycling the parts, and it actually does degrade the parts more than if you were just to run them steady state. So there's a lot of benefits to continual running of power and ways to actually monetize that. So I kind of jumped back into my history a little bit more, but I just thought it'd be good to kind of just tie it together, and you could see how I'm so interested with this. And we haven't even started talking about data centers and everything, but just on the Bitcoin mining self portion, but on its own, I think is very interesting, and it definitely complements the whole power generation side.
Definitely. Look, with your background and everything, and also the fact that you've got these personal connections. I guess just by meeting the CEO and other people involved in the CleanSpark operation, it sounds like you're the guy in terms of analysts that knows all about everything that's going on with this company. So, based on what you've seen, what is CleanSpark doing differently, that made it stand out to you that these other companies are not?
So if you look at, and there's probably a good 15 or more Bitcoin mining companies in the sector that are publicly traded, that have a decent sized market cap where it would kind of draw a lot of interest. Some of them go for just very large, kind of hyperscale mega sites, right? Ones that'll operate over a gigawatt of power. And then you have others like CleanSpark where they've got 30 plus data centers. So some of them, they may only operate 20 megawatts, even maybe even some at around 10 megawatts. So they're a lot smaller pockets of power. And you just have to look at it to see, what's the benefit of each. Of course, if you have one location, you might be able to get away with less manpower to kind of operate the data centers, right? Excuse me. But on the other hand, if you're able to utilize, remote monitoring, and you can get away with more of a skeleton crew at these different locations. And I did
Yeah.
see that even at CleanSpark Sandersville, sorry, location there. It's sitting close to right around 250, 280 megawatts. And, they've got maybe from when I was there, maybe 15 or 20 or so people. So it doesn't necessarily take a massive amount of people and personnel. And at these other sites, they may have one or two regional people that can kind of jump
So,
between them
in
all.
terms of their, like, geographic distribution, uh, I'm not too familiar with it, off the top of my head, but this is something we're looking to, like, roll out on our platform, like, the map where you can see all the locations. Are they spread out across the country, or is it just, like, particular states that they're focused on, like Georgia?
Great question. So actually, they're spread out a little bit. They have locations in the state of Georgia, in the state of Tennessee, in the state of Alabama, and then in the state of Wyoming. So those are their main four or those are the main four state locations that they're in. They did at one point in time have I think it was um, a hosted site in New York, that actually expired back. I think it was sometime around November, December of 2024. So ever since then, they've been fully owned, fully operated. All the Bitcoin that's on their balance sheet, it's came from mining itself, and it's all mined here in the U.S. So they don't have any international sites at the moment. So it's just
Yep,
in
and
these
so
four
what you're
states.
saying also as well is that with many of these sites, they're not actually fully manned, a lot of them are, like, remotely managed?
Yeah, they can do remote managing because, even though there's four states, but they have 30 or so data centers. Wyoming has two sites that are very close. I believe it's in Cheyenne location. So they're able to run with like a smaller group of personnel to kind of keep those running. And one thing I thought was really fascinating, talking a little bit with Taylor Monig, who is their chief technology officer. He's in charge of the whole Bitcoin mining operations from a technology standpoint. So when it comes to selection of the different ASIC miners, actually working through some of their firmwares and trying to um, get as much of efficiency as possible out of these miners. He's the guy that does that. And it was mentioned to me. I haven't got a chance to see it at their corporate headquarters in Vegas. I'm hoping to get an opportunity to do that maybe this year after or before the conference. They actually have a monitoring center there at that corporate location. So yeah, anytime that one of these data centers has any type of anomaly type of issue, they will get that flagged and then they can call someone and get that taken care of. And what's really neat with a lot of these miners, and the way that they've actually set up a lot of their infrastructure, they can turn off just a single section within one of their buildings. And that way they can do some of that work. If they need to actually get in there and maybe swap out a miner or just swap out a fan, they can do that without having to shut down, a massive amount of their hash rate. So I think that's pretty
Yeah.
interesting. And I'm familiar with how remote monitoring works. We have 30 to 40 different power plants across North and South America. And we actually have a remote monitoring center here in Florida at the location that I'm working at. So it's really interesting to kind of see how that works. You've got a lot of data that's coming into those types of centers. So you can make a lot of calls quickly. And you can pick up a phone and get a hold of one of those sites at any moment, at any point in time. Um, so again, you're asking me why CleanSpark over some of these other companies. I think the geographical diversity portion is I think it's a good thing to have in case there's any issues. Say you have a power contract that's going to be coming up. If that power provider decides, you know what, I don't want to give you 4.5, 5 cents per kilowatt hour anymore. I want to go up and raise it to 6 or 7. Well, you're kind of stuck because you've got over a gigawatt of power running at this specific site. So you're at the mercy of that one utility provider. So again, I think having that diverse optionality does benefit even in that type of instance. And then looking at it from a fiber standpoint. So if you do want to be able to pivot to data centers, again, if you're not in an area that has an ample amount of fiber, it's going to be more difficult to actually utilize the low latency form of some of the AI compute that some of these potential customers are looking for. So again, that's another thing that I think is kind of neat. And I did do a deep dive into all the Tennessee sites. I broke down maybe 1 or 2 sites at a time on my channel, have a playlist on that. But I've also started going through Georgia, and then I'll be going through Alabama, and then also finally in Wyoming. But it's just very interesting to kind of see how much fiber is located, at each of these plots of land. And then if it's not directly there, you're able to find it within, a quarter of a mile. So it would take a very insignificant amount of cost basically to get them at a full business load of fiber for data center access. And most of the ones that I looked at, they have it right there. So I think that's really interesting. What did catch me
Yeah.
off guard was actually them mentioning that the Sandersonville location was going to be one of their first sites potentially here for this pivot into the HPC compute or HPC AI compute side. So when I drove there, it's kind of out in the sticks, if you will. It's not close to a major city, so I kind of wrote it off like I don't see the benefits here. But as I'm learning more, there's so many different applications, and the way it's working with a lot of the cloud side, depending on what the customer's looking for, they're still interested in that. So if they don't need that low latency aspect, it doesn't matter where these data centers are located. So I think that's an interesting thing. And again, it kind of caught me by surprise. I thought for sure Atlanta was going to be the first one, and then maybe Wyoming and Tennessee, and then finally the Texas site, which is coming online. I think it's the first quarter of 27. So
Mhm.
excuse me.
So that might be a good point to look a little bit at what they're doing with the AI stuff. So previously, CleanSpark, from what I've seen, was what you call a pure play Bitcoin miner. And as many people or many of the companies have been doing in recent times, they did announce recently that they would be also doing some AI data center stuff. So what's that looking like?
No, that's a great question. And we got a little bit more guidance in this annual earnings report on this earnings call. But prior to that, there was quite a few different press releases that did come out. As I'm sure you're aware, just from reading some of the press releases, their previous CEO, Zach Bradford, he's left the company, and once he left, Matthew Schultz kind of came in. He was already an executive chairman, so he's already very much in the day in and day out. He went in and stepped in, I think, back into the CEO role here for CleanSpark. And from what I gather, there's just been a shift in focus and priority with the company. I think that they were very much, pure play Bitcoin mining, and they were looking to just continuing to, dive in and try to get the most efficient miners as possible. They're already one of the top leading in terms of hash rate, of these publicly traded companies. So again, I believe that, from this departure of CEO, I think that's what kind of opened the door again for, some of the board members. And again, None of us really know what's going on behind those closed door meetings, when this decision actually came out. But you can speculate that maybe the board kind of saw a lot of the activities and kind of looking forward into how much demand there is for HPC. And I think the company just decided that this was going to actually be beneficial. And if you're familiar at all, I know you are, but some of your viewers, if you're familiar with the Bitcoin halving, it takes place every 4 years. I think the next one is in 2028, I think. Um,
Yes, roughly.
yeah. So, we're going to be seeing all of these miners are basically going to get their mining rewards, their block rewards cut in half at that point in time. And that actually just means that it's now going to take double the amount of energy to be able to mine the same amount of Bitcoin. And that is only if the level of difficulty kind of stays where it is, unless they completely scrap out all their miners and they can get miners that can basically cut their efficiency down by 50%, in order to be able to, kind of bridge that gap. And that's a very expensive kind of shift. And again, this shift happens every 4 years. So there's just a lot that has to go in to the decision there. And I think right around now, they've got a little over, I think it's a little over 2 years, maybe 2.5 years or so, until that next halving. So if they're starting to plan some of the CapEx purchases and really looking into it, I think now is probably the time that they need to really, make that defining move to decide, yeah, we're going to go in on HPC now. They're not going to be abandoning Bitcoin mining. They talked about that on their earnings call. They're actually going to be utilizing
That's good.
the same strategy. So the way that they're able to get some of the low cost, from a kilowatt per hour standpoint, cost per kilowatt hour, was by having these commitments to curtail anytime that their utility provider needed them. And I think they were looking for, gosh, I think it was around 130, was it 130 hours, I think, or something of that nature of curtailment that they were looking for. And this was at their Georgia, some of their Georgia locations. So what they're planning on doing is they're going to be actually doing kind of a blended approach where they're going to have a specific amount of Bitcoin miners still operating at the location so that when the utility provider needs them to curtail, they can shut down those Bitcoin miners and not impact their least customers for the HPC side. So I think that's another, smart, lucrative thing that they're doing. And they actually mentioned on the call that, and I've been there, the sites themselves, they're not the built sites, they're not actually made for HPC. So they're actually going to be bringing in some modular units, and they're going to be getting some of the additional infrastructure from a power standpoint kind of pulled over. They're right next to a substation. And the site location is going to be adjacent to that Sandersville site. So again, they're going to look to basically have that optionality to kind of go back and forth, if you will. And they already have those immersion style ASIC miners, which have the really low efficiency. I think it's around 13.5 joules per terahash. Those are the S21 XP Pro immersion, I believe. But with those modular style, they can turn around and put those on the back of a truck or truck and trailer and move them to another site, either down the road in Georgia or even, up into the state of Tennessee or over to Alabama. So there's a lot of opportunity for them to kind of relocate the hash rate. They can do the same thing with a lot of their air-cooled miners as well. But again, I feel that if you want to be strategic about it, this is just my opinion. You want to take your most efficient miners and you want to have them dispatched to areas, either that have higher cost per kilowatt, because that's a great way to counter that, or areas that, you've done the due diligence, you've decided, hey, this is just going to be a pure play, Bitcoin mining site moving forward. So I think that's what took them a little bit of time to really sort out exactly which locations. And I think obviously from Matt's conversation on the earnings call, he's been getting phone calls from hyperscalers, interested in specifically the Sandersville site just because of the amount of power that they have under contract. And again, they're not getting another 200 megawatts or so, at least that hasn't been, stated. So they'll be looking to kind of pivot and shift over some of that Bitcoin mining to kind of fill up what these customer needs would be, when they get rid of lease these sites. And they're working with a a infrastructure, kind of a modular infrastructure company called Submer. I believe it's a company from Spain, if I'm not mistaken. And they work a lot over in Europe area. They've worked with Humane, which is over in Saudi Arabia, and they've worked with all the major chip manufacturers, AMD, Nvidia, and Intel. So I think from understanding how their setup is, really their modular units can take any of those specific GPU types. So really, it leaves a lot of optionality for that customer when it comes to negotiating and talking about leasing of contracts. So I think that they're in a good place for making that move. So again, we're not sure when that's going to happen. I believe from Matt's conversation on the earnings call, he said that he would rather lock in the leasing agreement with the customer and then go down the path of getting the right type of infrastructure and getting the right type of GPUs, or whether it be co-location or whether it be just vertically integrated. He was going to basically make sure that he got the right contract. So I think they're really looking to get the highest, price per megawatt from this leasing customer. So they're really looking, again, from a strategic standpoint, monetizing that energy. So I'm rambling a little bit, but I get really
No, no,
excited
that's
when I'm talking about CleanSpark. So
well, I don't blame you. It all sounds like pretty interesting stuff, and yeah, like a lot of this is not even really on my radar. So um, it's interesting to just listen and hear what's going on there. So yeah, how about we dive a bit more into the earnings? So just going off, I'll share my screen because there's a few other things I wanted to cover here. Hang on a second. Um, so uh, just going to our platform here. Obviously, yeah, CleanSpark had their earnings like 2, 3 days ago now. But just looking at the weekly performance of all the Bitcoin mining stocks, well, on Friday, CleanSpark was the top gainer. It's up over 12% on Friday, but for the week, it was up over 50%. So obviously, I mentioned earlier the whole sector had a bit of a bounce, but clearly, CleanSpark there has reacted positively to what they were discussing on the earnings. And we've also got uh, on the platform here the summary. So a few of the key points here in the last or this period, as you mentioned, Matt Schultz rejoined as the CEO. Their revenue was up over 100% year over year. This period, it was $763 million. They produced over 8,000, or just under 8,000 BTC. And I think also as well, their treasury is 13,000 BTC, an increase of 62%. Uh, as you mentioned, hash rate is at 50 exahash installed, I believe. And this is the second in terms of rankings in hash rate among all the companies. Uh, And yes, the other major news was they started doing the AI and HPC expansion. So uh, here they've acquired a Texas site with 285 megawatts with plans for an AI factory. So do you know what that means? AI factory? Are they producing like some chips there or something?
no, no. So I believe they're going to be looking to actually, again, I don't know if it's going to be co-location or if it's going to be vertically integrated, but it's going to be an actual HPC AI data center. So, and that 285, that's not all critical IT load. I think if you were to go into that one specific press release, I think the critical IT portion is somewhere between 200 and 230. So with all of these data centers, you have to have, that support utility, whether it's the pumps for the cooling, or whether it's some of the additional
Right.
utilities on site for different lighting and different things. From my understanding, is you could take whatever the fully contracted power is for the specific site, divide it by about 1.4. that's about, you take about 40% off of the total power at that specific site that they have contracted. And that's what's actually available for that critical IT load. Of course, as you're looking at infrastructure and really focusing in on efficiencies, you might be able to get that ratio a little bit more favorable. Maybe you can get around, a 30% drawdown on power versus 40. But that's just what I've kind of been looking at, as an average over the last little bit. And I'm sure, when you look at the way Bitcoin miner innovation has been going, and you just look at the way GPU innovation has been going, I feel that the same thing is most likely going to be happening when it comes to the support utility needed at these specific sites. They're going to be looking for ways to kind of improve on efficiencies, and a lot of that is just in the bare bones of the structure. So I'll be interested to kind of see, how they kind of put this together. I do believe that this is going to be like a full build site, if I'm not mistaken. So they're not necessarily looking to pull in a lot of the modular centers, like they're going to do, I believe, in the Sandersville site, in order for them to be able to kind of jump into the HPC side quickly. They're going to use, some of the modular units. So again, they're not planning on actually energizing until I believe it's the early of 2027. And the reason why they're able to kind of get that date was this specific site already had, I believe they mentioned this either on this call, or it was mentioned in another interview, but Matt mentioned that they were, or it might have been Harry. They mentioned that when they made this acquisition, there was already a request at ERCOT for the power connection. So again, that's something that there's quite a bit of a wait time to kind of to get. So that was kind
Yeah,
of part of the strategy
it
here.
says here that it already ERCOT approved
Yes.
that Sealy, Texas site. So
Yes. So yeah, that's a big hurdle on its own, and that could actually cause quite a bit of delay. So the fact that they already have the ERCOT approval portion, really, it's just going to be, looking to build out the site and then getting the right customer lease agreement in place for that. So again, I'll be interested in it. And from the call, it sounds like this is third on the list, if not a little bit lower on the priority, as far as when they're going to get HPC up and running. The first priority, again, is Sandersville. The second one, he said, would be Atlanta area. There's a couple sites there. And then after that, he threw out Tennessee even as some possible options. And then, yeah, this one will be coming out in early 2027. So again, there's a lot of activities, and I think that's what might have caused a little bit more excitement around, the stock itself, as you said, from the week, being the top gainer. When I did quickly look at that list, I believe all of those companies have some form of HPC now, as part of their offering, or in their guidance moving forward. So that,
seems to be the case. Like,
yes.
I know that we looked at it recently, and it was like the YTD, all the YTD gainers or top performers, even last year as well, they were ones that were involved in the AI HPC stuff. So
Yeah, so I mean, if you look at it from a valuation standpoint, a lot of the companies that are actually getting those contracts, like TeraWulf was one of the first companies in the kind of the Bitcoin mining sector that locked in a contract. They're seeing crazy, 2, 3, 4x, 5x multiples right on their market cap. So again, and that has a lot to do with the amount of revenue that you can get per megawatt. I believe it's a significant increase. Now, with that comes, more CapEx. So I think a good rule of thumb is for every megawatt, it's about $1 million of CapEx spend for Bitcoin mining. And then when you look at HPC, if you were to do a greenfield space, you're looking at about 10 million dollars per megawatt, actually, to kind of build
big
that out. So
difference.
yeah, benefit with having sites and being able to retrofit. That is where you can gain a little bit of more favor, and maybe it's only 4, 5, 6 million per megawatt, which is pretty good, pretty competitive when you start to look at margins and everything like that. And then one thing, I don't know if you're familiar with this, but CleanSpark actually has both Norcross and College Park locations. And the Norcross site, it was an old data center. that has been converted over for the Bitcoin mining for immersion tanks. They have them all fitted up there. So there's a lot of really good bones at that specific site location that can be used for the actual data center. So I believe I want to say it was like an AT&T kind of telecommunications data center. Don't quote me on that, but again, when I was doing my research on that and I saw that as an option, I know that that's going to actually save them a lot of money when it comes to that conversion cost. So again, just another thing that kind of makes me excited about their decision to pivot. So I've been just kind of really looking into it. I've been invested again, about a year and a half, a little bit more than that now, and I've not been swing trading it, if you will. I've really just been kind of keeping my head down, kind of leaning in on their forward guidance and just paying attention to the press releases like a hawk, I guess.
Mhm. Well, yeah, if there's definitely something that I've learned over the years, and doing investing is that it's generally good to pick things with a long-term vision, and you don't do any sort of day trading. You just sit on it, and in the long run, you generally can't go wrong with that if you've identified something that's got good potential. So, yeah, from these financials, was there anything else there that stood out to you? Otherwise, we can then have a quick look at the convertible notes that they did recently, because obviously that's the big news.
Um, just kind of looking through some of the Q&A section to see if I could find. I think it's worth mentioning that they already have 6 exahash in hand, and those are those Bitmain S21 XP immersion units, the 13.5 joules per terahash. They have them already on hand. They've already paid for them all. They have not actually looked to inject them into any of their sites at the moment. And the explanation that Matt provided was that they've decided to kind of really focus in on which of the specific sites now are going to be, used and converted over to HBC. That way, they don't spend a lot of cost and time to kind of get this six exahash into these, immersion pod setup here with IntelliFlex, and then have to turn around and move them again later on. So that was kind of what they mentioned. And I believe they gave a little bit of a timeline where we would see some of this getting deployed in early 2026. So we could see them hitting 55 exahash, the first quarter, or, within the second quarter of 2026. That I thought was a pretty cool, a little tidbit that Matthew did provide. Again, we already talked a lot about the Sandersville site. You mentioned that, the treasury, they have 13,000, I think it's 33 as of the latest press release that they provided. And one other thing I think is really interesting, and Gary talked a little bit about this, is their digital asset management side of their business. They shared that, they made, I think it was around 2.3 million this past quarter. And this was the first quarter that they started to kind of move a little bit more of their treasury in. And I believe I saw a wallet transaction in the month of October where they shifted over, that 40% amount that they had talked about on the last earnings call, where they said, whenever they were ready to kind of go from that crawl, walk, run phase, when they got ready for that walk phase, they would look to utilize about 40%. And then from that 40% of their treasury, I believe they were looking to hit about 10% on an annual basis on the 40, which gave them somewhere around 4% on their entire treasury. So 4% of that.
Just sorry, what are they doing with these funds, these Bitcoin?
Yeah, so of that 40% of their treasury, they're actually using it for derivative trades. So Rory, he is actually the head of the digital asset management group, and he'll sell a covered call. And depending on the volatility of the price of Bitcoin, sometimes he'll sell in the money call. Sometimes it could be an out of the money call. And when you look at that, if they already sell a portion of their monthly Bitcoin mining to help cover operations. So since they already have that as kind of part of their DNA now, is they already know, hey, we're going to be selling, whether it's 60, 70, 80, 90%, of this month's monthly mining. They can go ahead throughout the month, because they have such a large hodl, they can start selling covered calls at, a price, whether it's $1,000, $2,000, $3,000, $5,000 above the current Bitcoin price. And then if that doesn't hit, and they'll do kind of a shorter term, maybe it's like a 3-day, 5-day, 10-day contract. If that contract doesn't hit, they get to keep the premiums, and then they can turn around and put up a brand new contract. And it was the amount of contracts that was put out was incredible. I don't have that number here to share. Maybe, we could post it on X or something. I think actually I may have had that. So maybe by the end of this, I'll pull it up, but it was very interesting. So they've done hundreds and if not thousands of these transactions over the course of this last quarter. And then looking into October alone, they had actually disclosed making $5 million in premiums from their covered call strategy. So that is what they're looking at. And then they'll actually do another portion that's out of the money, something significantly higher. Maybe it's more like 15, 20, $30,000 above the current Bitcoin price, something to where if I actually hit that, the amount that they'd be paying in capital gains, it kind of helps cover that a little bit. They can still kind of collect some premium if it never kind of gets to that within the expiry or expiration date of those calls. So that is part of their strategy. I believe they didn't mention a small amount. They've done some form of like I think a covered put, because of course, they can also kind of hedge either direction, depending on, where they're kind of seeing some support and setups there with Bitcoin. But again, the reason why I bring it all up, if you think about it, if they're able to kind of hit that goal at 4% of their current treasury, right. I think the last time I saw, I think it was worth maybe $1.3 billion. So the amount of money that they could be making just on premiums would actually cover the entire company's cash on payroll and then some. So that's another really cool strategy. And a lot of times when you look at Bitcoin mining, you've got to look at the cost of energy. You've got to look of the SG&A, so the payroll, marketing, everything that would kind of go into those. The stock compensation again, whether it's restricted stock units or whether it's performance stock units, for various team members. And then you've got the depreciation, of course, on these miners. And that depreciation is kind of tricky because some companies will they'll extend it out to 4 years, others do 3. So you've really got to get a good pulse if you want to do like a good side-by-side gap analysis of various companies. You've got to really understand on the financial side how they have all that set up. But going down a rabbit trail here, let me pull it back. What's really neat with the way that they're doing the derivative asset management is that, that takes some of that burden away from the Bitcoin mining side when it comes to, paying from a payroll standpoint and some of the other administrative sides of the cost of running the business.
Yeah, well, look, I didn't know that they were doing that, and that's kind of interesting if they can leverage their treasury to, do more than just sitting in the wallet, and it's actually being put to work in some ways. If I'm not sure how many other of the treasury companies are doing such things, but yeah, good on CleanSpark for doing that. Now, looking at it's a 1.15 billion convertible notes offering. A few weeks ago, I believe that was announced. But what sort of what are the key terms of this offering? Do you know? And what are the proceeds of the offering earmarked for in terms of like expanding their operations? Is it going to go like some to the AI HPC stuff, or like some to mining, or is it just going to one particular area?
That's a great question. So they actually disclosed that in some of their press releases, and they talked a little bit about that in their 10K that they filed through SEC. So they actually utilized of that 1.15 billion, $460 million went to share buyback. So they actually purchased, I believe it was $30.9 million worth of stock, and it came out to about, I think it was 10, maybe 10.1 million shares. Or I'm sorry, it was a little bit over 10% of their float was bought back. And the reason why they did that, anytime a company goes through and does a convertible note transaction, the note holders like to kind of hedge the risk, because if they're going to be holding these things long for 2, 3, 4 years, and this note, by the way, it's due in 2032, 0% interest, and it had, I believe it was around a 27.5% premium on the conversion price. So of the day of the close, I believe the exercise price would have been, or the share price was around $0.03 if I'm not mistaken. Don't quote me. And they've got 27%, 27.5% premium on top of that. So until that price hits, um, even if the maturity date was to happen, it wouldn't trigger, the requirements for them to pay that note back right at that point in time. So I think that's another really, really cool way. And a lot of the companies are doing that. It's just a matter of timing in the bond markets and things like that of exactly how they're able to capitalize on that additional conversion premium. But kind of going back to it. So with that, there is an optionality, I believe, to have that exercised, I believe, as early as 2029. But again, there's more requirements. It's got to hit 130% of the conversion premium. So again, it just magnifies how high the stock price would have to be. So the company, when they did this, and Matt talked a little bit about this, is they're really placing a bet on the company. With them moving over to HPC AI, we see
Yep.
the premiums, the multiples, that the market is giving these types of pivots and these types of companies actually. And they're betting on that type of multiple occurring once these contracts are signed. And if that happens, now there is 10% less stock available. So your earnings per share goes up more. And then also that share price appreciation would go up more. So anytime that you buy it back, you're not necessarily, you shouldn't necessarily change the market cap at that point in time because you're reducing the share price, and you're reducing the share count at that point in time. And typically the price would kind of adjust for that. But when you start to tack on the multiplication of the premiums the market gives for, pivoting, and changing your valuation, that is where that buyback actually kind of helps a little bit. And then also, if you look at one of the things I like to look at too is just how much of that float is even available for trading on a day-to-day basis. You're going to see a lot of institutions hold CleanSpark, Mara, a lot of these other companies. CleanSpark, and the disclosure is back in September 30th of this year. That was the requirements for all the institutions to actually put out their 13F filings. So all that data is for that specific time and period. But looking at that, the institutional ownership was around 85%. With the share buyback, which happened after the quarter finished, but just to kind of put in perspective, with that 10 million now removed from float, the institutional ownership would have skyrocketed over 90, close to 95%. So when you look at that situation, if the same number of institutions were to jump back in sometime this quarter or next quarter, and the total float remains the same, there's going to be a lot of a supply and demand shift, if you will, a supply shock, and then a large demand there. So I think that's going to be very interesting to kind of just see how these things kind of stack up. And that's another reason why I believe that when the company's talking about betting on themselves, kind of what they're looking at. I was able, I could probably share my screen. I was able to find that derivative thing we were talking about.
Yep.
Just give me 1 second.
And I was going to ask about the institutional ownership and everything, but luckily you've already covered that. So
Yeah. So Rory actually kind of talked a little bit about this, and this was actually shared during the earnings call. I just wanted to kind of point out. So in quarter 4 of 2025, and again, their fiscal year ended in September. So this would be that last July, August, September period. They had 5,425 total contracts traded in their digital asset management group, and they generated $2.8 million in premiums. And that does not include, they did some Bitmain call transactions on ASIC miners. A lot of companies are doing that too, where they'll basically utilize Bitcoin as a collateral, and then at some point in time down the road, they can basically buy back that Bitcoin at that negotiated price. So that's another way that you can kind of generate a little bit of additional money, kind of through some of the derivative tradings. Not including that, it was 2.8. Looking at this past month of October, in one single month, they actually traded 6,338, and they generated a premiums of $5.1 million. So again, The price of Bitcoin has been crazy like a lot of volatility over the last month or two. So anytime that you see that, you get a lot more IV. So you get a lot more volatility, and you're able to kind of trade that in options. So that does generate in the money opportunities for higher premiums on those types of trades. But for whatever reason, if the price of Bitcoin finally starts to stabilize a little bit, maybe you have like a kind of a slow chop up or down, as long as it's not trading crazy, thousands of dollars in a day, then, they can then change their strategy to go from in the money premiums to kind of looking to go for more out the money premiums. Again, we talked about that a little bit. So again, I'm just excited to see this type of setup where, the company's looking at, a way again to gain value. And there's, besides the one or two people that are really managing, the trades, there's no other cost that's going in. There's no really additional power costs or anything that would be related to this. So again, any of those proceeds are really going to help on the administrative side of the company. So I did hear also, I spoke a little bit with Hut 8's CEO Asher, and he talked a little bit about their digital asset management company. I believe that they were able to generate about $30 million for a year, doing these types of derivative trades. So it's not necessarily something that's brand new, but I think only certain companies are doing it effectively. And so far, at least from this last quarter and this last month that was disclosed, it's looking like they're doing a pretty excellent job, in my opinion.
Yeah, I think that's probably worth looking into, seeing which companies are doing that and maybe comparing them and ranking that sort of thing. So I don't know if that's something you've done already, but it might be worth looking into because I think that's something that people might be missing out on.
Yeah, no,
So
definitely.
anyway, let's look at wrapping things up here because we've been going for a while. But do you have any kind of predictions or uh, things that you're going to be looking out for in the future with CleanSpark?
When I say predictions, it's more speculation. Outside of course, the guidance. They did provide us a little bit of updates. I do think that by the end of the first quarter in 2026 calendar year, we should start to see we should start to see some contracts actually inked, in my opinion. Based on what Matt was saying, they're already having negotiations with a couple different companies there for Sandersville. So I do think that that's something to look forward to. Excuse me. Outside of that, I think it's just a matter of watching their hash rate. I do track that on a daily basis. Them and Mara, they are transparent with their publicly traded wallet there. So all the mining numbers kind of go through there. And since they don't have any joint ventures like Mara does, this is pretty much their entire daily operations that you're able to kind of look up each day. So I am constantly looking at that to see an uptick on the actual daily Bitcoin mining amount, and that'll be
So
a good.
I've seen those posts. Basically, what you're doing is you're seeing on the blockchain like how many new bitcoins are coming into that, and then you're kind of comparing to the difficulty and global network hash rate to work out what their hash rate is. Is
Yeah,
that correct?
that's correct. Yeah, yeah, and you can get pretty close. You can look at the overall global for the day. That average, and then you can look at what they're actually mining, and just looking at the block reward amount. You can get pretty close now. That obviously there's some transaction fees that are also part of that, so you can't nail it down 100%, but you can get a pretty good idea if there's more hash rate kind of coming online. And you did see about, I think, 1 exahash coming online for CleanSpark, because as you mentioned, they do have a total of uh, 50 exahash installed, but they've only been operating, in the mid 40s, I think 45, 46 exahash, if you look at their monthly updates. And then they were able to turn on, I think it was about another 1 exahash. And again, I was kind of looking through, and you can kind of see, on a day-to-day basis, kind of a forward trajectory on that daily mining amount. So that's a good indicator that more hash is actually coming online. So again, I'll be looking forward to seeing that this additional hash rate coming online, and it being with the more efficient miners. It's going to help them from a margin standpoint as well. So again, those are just some of the things I'm really excited for CleanSpark. So again, there's a lot of speculation of who the customers could be. All that is yet to be disclosed. But I just, in my personal opinion, not giving financial advice, I don't want to be on the sideline when a news comes out, because I've seen it with Terwolf, I've seen it with Cypher, I've seen it with Iron. Um, it's a crazy gap up, and when these specific deals are inked. So I will be cautiously and patiently waiting. In the meantime, I'm also looking at the county of Austin in Texas. I've been actually looking at their property appraiser site, or properties a record search site. You can actually find any actual purchases. Of a change of deed of ownership on those various sites, and that's how I was able to pinpoint a lot of the data centers for CleanSpark. So I'll be looking for that specific location to kind of pop up for CleanSpark in terms of exactly what the address is. And then at that point in time, you can really start to look at satellite imagery and kind of get a
Ah.
feel for when they're going to start breaking ground and building this data center. So yeah, that's it's pretty much kind of what I've got my eyes set to. And then I will be joining the Bitcoin mining conference again in Vegas this coming year. So I believe this year it's in April. Hopefully I'll be able to kind of meet up with some of the members there. And then I had quite a few Mining Mafia members here on X, on the social media site. They were also in attendance. So it's a great opportunity to kind of meet some people that you wouldn't else see on day to day.
Yeah, well, I didn't go in 2025, but we were there the year before. We're planning to go next year, so that should be cool, and maybe we can meet up there. But anyway, thanks very much, Ernest, for taking the time to come and speak to us all about CleanSpark. I've definitely learned a couple of things today that I wasn't aware about. And for you guys watching, again, go and follow Ernest Hamilton on both YouTube and on X. His handle on X is Financial Ernie. So, yeah, thanks very much, Ernest. I'll let you go.
Thanks, Hayden. Have a great rest of the day. Keep calm, hash on, and I'll see you on the next one.